Hey, this is Matt from InvestiQuant. Today is Tuesday, April 5, 2022. Yesterday, the markets finished strong. They opened up and then continued higher from the open, pretty much the entire session closing up at the highs. We had about 47 points of range in the S&P, and we continue to climb off those recent lows. Volatility is dropping a little bit as we continue to climb, and I figured we would share a volatility study this morning. So this one is a strong long-term bias that's been in the markets forever that I thought you might enjoy. So let me go ahead and set it up, and I'll share this with you. We're going to be looking at all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, for this study, we're going to use opening location. We are gapping down, or at least we're trading lower as of the time of this recording. So I'm going to add that to the study, go into the opening filters, gap direction, gap down. Next thing I'm going to do is go to the indicators library. We're going to use three different indicators here. We're going to use a 10 and 200 like we normally do. So we closed above a 10 and 200 day simple moving average. So that's kind of a bull market environment. And then we have falling volatility. And the way I'm going to define this is I'm going to use a VIX moving average. So in the active today, I'm going to go down to the second option here, which is the 5-day moving average of the VIX is less than the 25-day moving average of the VIX. You can see it right here. So that's been selected. I've got equals next to it. So it's kind of like a falling volatility environment in a bull market. We're getting a gap down. Let's see what has happened. Let me click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you are gapping down, you're in a bull market and the volatility is falling. So that's being defined as the 5-day moving average of the VIX is below the 25-day moving average of the VIX. You're above a 10 and 200-day simple moving average. Historically, we've got 857 samples here in the S&P dating back to 2003. So very large sample sizes here for the S&P, NASDAQ 772, 830 in the Dow, 693 in the Russell. Win rates on these coming in favored. S&P, almost 60% of these closed above the open. For the NASDAQ, 58%. For the Dow, 59%. And the Russell, 54%. If we look at the average moves, the average loss is larger than the average win here in the S&P. That's also the case for the NASDAQ, for the Dow, and for the Russell. So all four of them do have larger average losses compared to their average wins, but the win rates are skewed towards the upside on very large sample sizes. So historically speaking, this day, or this environment is really more how I think about it, has been a more bullish environment, but when it's wrong, it does have the potential for bigger moves on the downside. Hopefully you found that helpful. Good luck today. We'll see you next time.